Hey guys, Boris from BK Forex. Welcome to our Forex weekly technicals for 1/12/1/17 of 2014. The key question next week is still King Dollar. Does the dollar still have any strength left after today's very weak NFPs that created a big retrace in all of the anti-dollar pairs? Let's take a look at the euro first, because to me the euro still remains essentially in a topping out pattern. We did a flash top out at around 139 right before the end of last year, and the range right now, until and unless we break the 39s, still remains to the downside. This is the weekly chart. And yes, we did find support 3550, of course, this week. That's been a key support. And I think that beyond that, there's the support also at 3500. This 3550, 3500, clearly pretty serious support. But when you look at the overall structure here, basically it's a failure at the top with lower highs for the time being. If we were to recapture 37, if we came back and captured 37, 3750 on a closing weekly basis, the structure would definitely turn much more bullish euro, and probably, at least turn a relatively neutral euro, and would put us in position to basically challenge the highs of 139 set last year. But for now, this looks like a retrace rally basically, and unless we can sort of overcome and hold 3750s, the question is still out as to whether the euro is a buy. There's definitely support here. So the euro definitely found support 35.50, and this support is key. If 35.50 is broken, that becomes much more bearish structure for the euro. Opens up the run, of course, to the 35, but really the big run is the 33 support. So if we have a turn here and we start pointing south and we start to look around 35, then the move in the euro becomes much more naturally towards the 33 lows as we go forward. Looking at, let me just get rid of all these lines. Looking at the euro complex, what is interesting though is that the euro is kind of getting a little bit stronger on the crosses, especially euro pound here. Euro pound on a weekly basis effectively sort of tested the bottom and kind of created a doji, basically a hanging man, which is an indecision candle, but suggests that there may be enough of a sellers here that the pair is kind of sold out here. So as a low risk trade here, the euro pound on a turn trade with below 85.50 as a stop. What is the low here? I think it's 82.30. So below the 82.30 lows, a potential turn here to 83.50, possibly crawl back to 84. Looks interesting, and that's a function of the fact that I think the pound is also starting to weaken out a little bit. Again, the pound kind of flashed out at 166. We are crawling back to 65, but at the 65 level, if you look at this actually on a daily basis, you see how tough it is to hold. It's made several attempts here to try to run the 65s, to recover back to 65s, has not been very successful at holding them. We've definitely rebuilt off the 63.50, but the 65 kind of caps, and really the other big cap is the 65.50. If both of those are taken out, then it creates a much more positive structure for the pound, puts us back to the challenge of the yearly highs at above 66, and puts us on a fresh high. That would be essentially lower highs here and a more positive structure. But if we start to kind of fail over here, this would be lower highs. This would be higher lows, but this would be lower highs, and that would suggest a much more bearish structure for the pound. Looking at dollar yen, this is the reason why the dollar, I think, is not necessarily dead in the water just yet. Yes, very negative structure, obviously. Yes, we did touch the 104s. Yes, we did test the lows. But 104 has been held relatively well. And I think the critical question here is sort of this 103.50. It seems inevitable that Asia comes in on Sunday night, and there's going to be a probe of the 104s, probably a probe of the towards the 103.50s. But the real big question is the 103.50 holds. If we basically don't make any further lows below the 103.50, then it's just a consolidation pattern and still a relatively very powerful uptrend. It doesn't become a full-blown up trend until the 105.50 is taken out. So we could just be in for a long period of consolidation here. But really, the bearish signal here would be a break of the 103.50s, the bullish signal, the break of the 105.50s. In the meantime, it's just kind of hanging in here, doing nothing. And we'll let the markets decide which way they want to go. The other thing that kind of happened this week that's interesting is the consolidation and the surprising strength in the Aussie dollar. The Aussie has been strong really primarily because of positioning. The positioning has been so skewed to the downside. There's been so much one-way traffic in the Aussie that effectively a short covering squeeze could very much be in effect. So where does a short covering squeeze kind of top itself out? How far could they squeeze it? Certainly they can squeeze it to 91. possibly 91.50, which is the resistance here on a daily basis. And the support here, of course, is this 88.50, sort of, let's say 88.25 is the key barrier support for the Aussie. As long as we kind of continue to build this shelf of support, the case for a short squeeze becomes higher and higher. Now, we do have some key event risk for Aussie next week. We have the Australian employment data, middle of the week. But the squeeze could happen before then. And if the Australian employment data is not as bad as the market fears, then that could just even precipitate even a greater probability of a squeeze all the way out to 9100. So that's kind of interesting as far as the crosses go. The other story that has really been a very sleepy story for a long time, has just blown up this week, has been the incredible weakness of the Canadian dollar, which soared over the last few days, took out all the yearly highs, took out the 107s, took out the 108s, took out the 109s today, as the data out of the Great White North is just looking horrific. So when you look at this on a longer term basis, we really haven't been at these levels, I think, in 3 or 4 years. Let me go back on monthly, so I think 5 years. And you can see that we really haven't been at the 110 level since 210. That's a significantly long time. The dollar CAD has not been at the 110 level. And I think it's worth watching, because certainly the 110, I think, is going to be a very key resistance level for dollar CAD. There is a lot of hanging resistance here at around basically 111, 110. I think is going to be very much a topping out area for dollar CAD, unless the situation just simply deteriorates significantly in Canada. But in the meantime, the pressure to kind of run the stops towards the 110 definitely is going to intensify. So the CAD looks really weak, both against the dollar and also in many ways against the euro, because EuroCAD now is approaching this key 150 level. And here again, you have tremendous temptation to run the 150 stops and push us into the 150, 155 corridor for EuroCAD. So both trades could have a little more juice this week on a continuation basis. Pound CAD is also very much an interesting look here. It's coming up against this 180 level, which is a big resist level here as well. So all of these CAD crosses breaking out to very fresh multi-year highs and around the key numbers, certainly worth watching, as momentum really focuses on driving this trade forward. Looking elsewhere, Kiwi dollar is basically kind of holding firm. The interesting story here in the Kiwi is against the Aussie. The Aussie Kiwi spread has been certainly in a one-way trade to the downside, but now also, if you're sort of buying this whole idea that Aussie is bottoming out, it's clearly potentially has a squeeze against the dollar, but if it has a squeeze against the dollar, it may bottom out against the other currencies as well for a near-term retrace move. So the potential here for a move towards the 110 off of the bottom here, also very strong. The lows here are really basically 107 would be the stop. If it breaks 107, it's a very negative construct for Aussie Kiwi. But if we kind of hold over here and start to crawl back up, there is potential here for recovery all the way out to 110, simply on a short covering basis for the Australian dollar. And last, what do we look at? We looked at dollar yen. Let me just see if there's anything that we missed. The only other thing is I want to take a look at the euro yen crosses here. With the yen coming in, of course, this 145 level has been rejected. And of course, if you're going to believe that the yen will correct now, if this 103.50 does not hold, then you have the potential for euro yen to drift all the way down to 140 and pound yen to drift all the way down below 170. So there are key levels that the yen crosses are approaching that may accelerate the selling if we start getting close to those levels as stop runs are run. That's a lot of stuff that's going to be going on next week, especially given the fact data set is going to be relatively limited after this week's data. But I think the absorption of the news this week and the opening up of Asia next week and seeing how the markets are going to position themselves could be very interesting, because if there's continuation on the liquidation of the yen crosses, we certainly could see some pretty dramatic moves as the week progresses. Wishing you guys the best of luck, the best of trading. Boris Schlossberg over and out.